Yes, there's been an increase in the interest in equity release mortgages or whole of life mortgages recently, and it's attaining a higher profile in the press and TV adverts as well. Personally speaking, I've got involved in this, and the reasons why people are interested are it could be they're on an interest-only mortgage that has come to the end of the term, they have insufficient income now, or they're retiring in order to obtain a normal mortgage, and this offers a way out for them. Other reasons are I had a recent couple that had a house worth 1.2 million in a bit of a state, wanted to do it up. One of the couple wanted to buy a Bentley as well, and we managed to raise about £600,000 for them able to completely redo the house and buy his car. It's got so many uses. But the primary things that are important here is that you don't have to have proof of income. It's purely based on the value of the property. I'm often asked how much can somebody borrow on this, and it is possible to get online calculators, but broadly speaking, these mortgages start from the age of 45. That's the first time that you can apply for one of these mortgages, and it would be the younger of two parties if two parties are applying. And at 55 you can borrow 25% of the value of the property, assuming that you have to assume that there is no mortgage, or the equity release mortgage will replace whatever existing mortgage you've got, plus some money if you wish. And then for every increase in age by 1 year, you can borrow an extra 1% of the value of the property. So if you're 75, that'd be 25%, plus 25 years would be 50% of the value of the property. Historically, there were some very bad deals out there, but I have to say that the equity release market now is highly controlled, even more highly controlled than the normal mortgage market. So with the older generations, there's still that degree of antipathy about or reluctance to think about these things, but I think once we talk to somebody, explain all the protection that takes place in terms of compliance, then they become much more happier. We talk to family members as well, particularly children, older children, so that they're aware of what's going on and the features of the mortgage. And so people do come around, and they do eventually, and they never look back and regret it, I have to say. Another question I'm asked is how long do the mortgages last? Well, effectively they are a lifetime mortgage. When are they repaid? Well, you have the possibility, if you wanted to treat it as a normal mortgage and pay back an annual sum perhaps equal to the amount of interest you paid in the year. The only other times that the mortgage becomes repayable is clearly when you die, or you're taken into permanent care and you have to leave the house. In that case, the property would need to be sold, but the truth of the matter is that you're given at least 12 months, or your siblings, rather your children, have that period of time to deal with the situation. And it's not really an awful lot of pressure even at the end of 12 months, as long as you're seen to be actively marketing the property, then it tends to be a very calm affair, although of course interest will still be being added to the loan. With an equity release mortgage, you have a lot of freedom as to what you do with it. For instance, if you want to move house, the mortgage is portable. If you're downsizing, it may be that you have to downsize the mortgage to suit the loan to value, i.e. if you're 50% of your current house but you're taking the lower value property, you need 50% of that lower property, which means that you would have to pay back part of the mortgage, but there will be no penalty on paying back that part of the mortgage. With regards to any work that you wanted to do on a house, improvements, extensions, etc., there's no limit to what you do. There are no restrictions. You've got a lot of freedom, and effectively it's very similar to a normal mortgage, except you have the facility of rolling up interest and not paying it, or paying part of the interest, or however you want to pay it. It's a very flexible product.